But my name is Richard Wang. So like Bernard said, I'm with the Lone Star in Santa Clara, California. It's in the South Bay. I am a mortgage originator. I did my first loan in 1993. And as a mortgage originator, the things that we look at in a file are pretty basic. It hasn't changed over the years, despite a lot of changing regulations and guidelines that we've seen in the last more recent few years. And the three things that we always look at are income, assets, and credit. And whether you're buying a new home or whether you have an existing home and you want to refinance your loan, you're always looking at those three things: assets, income, and credit. And so today I'm really going to focus on the last one, credit, because you guys need to get back to work and it will take me all day to talk about all three. But we're going to focus on a little bit on the history of credit and why it's important and what you can do as consumers, whether you're a home buyer, whether you're in the market for a new car, or whether you're just applying for credit cards or student loans. What are the measures that you can take in order to either enhance your score or to maintain your score? So it's really about understanding the system, and it's very complex. FICO, everything you always wanted to know, hopefully, and more. So there's a lot of confusion out there, I hear all the time. Even being in the mortgage industry for years and years, I was confused throughout the years, and because it's the algorithm, the formula for determining your credit scores, for example, is really similar to the quarterback rating in the NFL. Nobody has no idea how it's calculated. You can do your best, you can make your best guesses, but people, it's really secret, it's top secret, and it's hard for people to really give you a straight answer sometimes. So you really need to talk to somebody who has seen over and over and over many different types of credit reports and has consulted and seen people do certain actions to change that credit score and then develop a theory based on that. So there are a lot of questions such as that come up that you'll hear. How do I start building my credit? Should I transfer my credit card balances to new 0% interest rate cards? What are some shortcuts to raise my score in the short term? How many credit cards should I have? I'm going through this really fast, but because we're going to cover it soon enough. Should I close accounts I no longer use? A lot of those questions are very common. We get these all the time, and hopefully I'll be able to answer some of these by the end of the presentation. And again, if you have anything that comes up that you need to have answered right away, just feel free to raise your hand. So, really quick, what we're going to cover today, brief history. Can everybody read that? Why FICO is really important. What's exactly in your FICO score? What's not in your FICO score? Action items that I can give you to maintain and to improve your score. Starting from scratch, if you have no credit. When we were at Google last month, there was a lot of people who were foreign nationals and new to the country. So if you are a recent graduate, you have a son or daughter who is a recent graduate, how do you start their credit? And then the last thing is going to be disputing your scores. By the way, when we were at Google, it was almost all male. So it's so refreshing to see the exact opposite. And it's going to be interesting to see maybe if there's going to be a difference in questions. Okay.
And there'll clearly be better questions.
That's right.
There will be questions? That's my reason. Okay, credit scoring in the United States. Does anybody know when the first credit bureau was formed? Just take a wild guess. Anybody?
1960.
1960, earlier.
1922.
1897.
Bingo!
Oh,
You're off by a year. 1898.
Did you Google
Wow.
Yes.
I'm a nerd. I don't know what it is.
You were hard. I don't like
Okay, good thing you didn't say I'm a guy.
The older guy knew that.
So the first credit bureau was created by brothers, Cator, C-A-T-O-R, and Abe Woolford in Chattanooga, Tennessee. They were part of the Retail Grocers Company, and they went door to door, from merchant to merchant, to collect their charge customers' information. Do they pay on time? How much do they owe? Personal stuff, do they beat their spouse? Things like that. You wouldn't imagine, but there they are. I don't know which is which, but they soon realized that this was an area where there was a great need for people to understand their consumers and to know exactly who has the ability to repay them, who is the who has the best or the highest risk as far as repaying their loans. And so they went on to start the Retail Credit Company, which was the first credit bureau in the United States, which was eventually, years later, turned into what is now Equifax. And there, at one point, were 6 or 7 bureaus in the United States. They now boil down to 3. And so there's Equifax still. There's Experian, which is actually a formed in another country. Does anybody know what country that is? It's actually not a U.S. company.
Don't look at me.
Experian is based in the UK, interestingly enough. And then the last one is TransUnion. Now the first credit score, when was that formed? The first credit score. Because
1960s.
the credit, close, 1956. It was a mathematician by the name of Bill Fair and an engineer, Earl Isaac. And they formed the Fair-Isaac Corporation, which is now FICO. Now they created a score because bureaus were around for many years, and they didn't form until 1956. So it was a good 50 plus years before they realized, we have all this information, but how are we going to compile it and put it in an easy to read, efficient, and accurate format where I can assess somebody's risk profile right away. So they came up with the first scoring algorithm back then. They sent out 50 letters to some of the biggest creditors in the United States, and they got like 1 reply. So they had a hard time selling it at the beginning. And it was years and years before their first major account, I believe it was Montgomery Ward, that eventually bought into the theory that you do need these credit scores. And then soon after, Wells Fargo signed up in the 1970s after the Fair Credit Reporting Act was passed. And FICO became a public company in the 1990s as well. FICO wasn't actually available to non-lenders for use until 1989. So it's actually pretty recent before mortgage originators like me were able to use a FICO score in order to assess the risk of loan applicants. So what is a FICO score? It's a number that summarizes our credit risk based on a snapshot of our data at 3 national credit bureaus, Experian, Equifax, and TransUnion, at a particular point in time. So it's important to recognize that your score is dynamic and it changes based on information given to the bureaus at any given time. So they extract 2 different types of information. One is from the creditors. So typically your credit card company will report to them whether you made a payment once a month, or your auto lender or your mortgage company will do that once a month. And then they also extract public records. So any bankruptcy, any tax liens, foreclosures, or short sales, that's all public information that the bureaus can extract on their own. And so those are the 2 main sources of information. Altogether, there's probably 40 to 50 different pieces of information that the bureaus will compile and form into a FICO score. Questions? These are good. Is FICO the only scoring system? Has anybody drawn their credit score online? Ever? Do you know what website you went to?
Experian did.
Okay.
Free credit.
Freecreditreport.com. Anybody go to annualcreditreport.com?
Yes,
Okay.
that was the one.
Annualcreditreport.com will allow you 1 free draw per year because it's sponsored by the government. But did you know that if you go to a mortgage broker like me, or a lender, or an auto lender, and they draw your credit report on the same day, you could have a completely different score. There are actually, how many different FICO scores are there?
3.
There are actually, I got ahead of myself. So there's like, as a mortgage broker, there's actually 2 different versions here, 1 and 2. There's the new generation or Vantage score, which was a score that the 3 credit bureaus actually got together and compiled a score of their own to kind of take market share away from FICO. They went through this huge litigation and they actually won, but 90% of the lenders' credit decisions these days are still based on the FICO version. So for now, it's still by far the dominant score that's used in the industry. And then there are these consumer FICO, also nicknamed FICO scores, that you get from all the bureau sites, Experian, Equifax, TransUnion, they all have their own score. TransRisk scores for TransUnion. You can go to sites like Credit Sesame, Credit.com, Credit Karma. All those have different scores, but if you look closely and read in the fine print, they will all say these may or may not be the same scores used by your lender, and it may vary substantially. And so the reason is you have to see who is pulling your credit score. If there is a risk assessment element to it, for example, Credit Sesame is not lending you any money. You're not agreeing to any payment obligation. And because of that, your scores are typically going to be 30 to 40 points higher. So almost every time when somebody comes to us with their own credit report and then we draw theirs, all of a sudden 720 is now 701, they're always surprised, and this is why. There's actually 49 different FICO scores out there right now. 49 different ways of scoring. And this was taken right off of the Experian website, calculated on the plus scores. They call it something different. It's a relative credit risk level for educational purposes, and it's not the score used by lenders. So you got to be careful when you go out there. Your score that you draw yourself will be different, but the data that you receive and the trade lines is more or less is going to be the same. So you can see if there's mistakes, you can see how much you owe, but that actual score will be different depending what you're going to ultimately use that for. Okay. And how important is the FICO score? How many homeowners do we have in here? And how many people have auto loans? Okay. Anybody? Well, I won't ask. I was going to ask whether you've ever been declined, but this is what mortgage and lending professionals look at. This is a very basic FICO LTV grid determining pricing. And LTV is a short acronym for loan to value. So depending on how much down payment you have or equity. So you can see the columns here, it goes from 60%, 70, 80, all the way up to 95% of loan to value. And on this column here, you have the credit scores from 740 all the way down to 620. And as you can see, the lower your score is, what we see in the middle here are charges, fees that you have to pay on a percentage basis. So down here, I'll just go like this. So this short column here, if your score is 620 to 639, and your LTV is 70 to 75%, you have to pay 3% of the loan just to get the same terms as somebody up here with a 740 credit score. So 3% of it on a $500,000 loan, that's $15,000 just for your credit score. Okay, so it can be a big difference. Did you get that? It can be expensive. Here's another way to look at it. So this loan amount of $250,000, different credit scores, 740, your monthly payment is only $1,200 based on the 4% interest rate. If it's at 620, which is another common threshold, it can go all the way up to 6%. Monthly payment goes up to $1,500, 560, and it goes up to $2,380 based on an 11%. And this is typical. We see this all the time. That kind of range with interest rates. Let's take a look at what's in your FICO and how it breaks down. So, has anybody seen this pie chart before? For your notes, you might want to go to myfico.com. It's the consumer website for FICO, myfico.com. A lot of great consumer information there that I'm going to go over here. The blue part of the pie, 35% is payment history. And let's take a closer look here. It's basically your payment history. Do you make your payments on time? Are you late? And if you are late, let's look at in detail how recent it's been, how many times you've been late, and how severe the late is. Is it 30 days, 60 days, 90 days, or worse? Has it been sent to a collection agency? That would be usually the last action that a creditor would take if you have a major payment.
How far back do they look?
Sorry?
How far back do they look for that credit, for the payment history?
That's a
Were you
good
ever
question.
late 4 years ago? Were you ever late this month?
No, bad information will stay in your credit report for 7 years.
Wow.
Okay. Will it affect the score? Probably, but it's not a linear result that we see. The biggest impact, because of the recency of the derogatory, will occur in the first 12 months. Beyond that, it drops off substantially. But it will still affect the score even at any time during that 7 years. And then after 7 years, it will go away for most derogatories. For other things like Chapter 7 bankruptcy, it will stay on a little bit longer. Your good payment history will never get deleted. Okay, so that's one reason why you should never close your credit card accounts. But we'll go there later. Okay, so 35% is payment history, the big chunk. 30% is amount owed. What do I mean by that? It's basically how much debt that you carry. In other words, I don't know if you can read that. It's the utilization ratio and the number of accounts with balances. Let me just go here real quick. So how many people have at least 3 credit cards, which is great, but the utilization ratio here is all of a sudden 90%, and that's going to decrease your score significantly. So they look at account to account. Now these are all 0, which is fine, but anytime you're over 30% on any kind of revolving account, any kind of credit card account, it's going to impact your score detrimentally.
Is that like, assuming you're carrying a balance, like let's assume I pay my credit card off every month and it's $9,000 every month?
Yes.
It goes back to 0. Are they looking at that, or are they looking at what I carried over every month?
That's a good question. So it depends on when your creditor reports to the bureaus. If you look at your statement date, it's usually going to be the 25th or something before the 1st. They will send that, that's the day they send the statement out. A day or two later is when they usually report, at least for the major creditors. And when they report, it's going to be, again, it's a snapshot of your balance at that time. So if you haven't paid off your balance at that time, even though you may customarily pay it off every month, they will take that ratio. So it's a good idea to usually pay it, if you want to keep your credit score high, to pay off your balance, or at least pay it down to 30%, about a week before that statement date.
So if I just had 1 or 2 credit cards and I used them very heavily, right, that's my max, that's bad for my credit score.
Yes, depending on when they report it.
Yeah.
If you're savvy enough to pay it off completely though every month, about a week before the statement date, then you won't have any problems at all. Okay, but yeah, no matter what you use it for, if you keep that balance high, it will take away from your score. They also look at the aggregate too. So it's not just one account, they'll look at the total of all your accounts, the balances, the total credit limits. And one way to kind of cheat the system is to always increase or ask for higher credit limits, because that will knock your utilization ratio down. So you can keep your balances low, try to increase your credit limit if possible.
When we request that, doesn't that affect our credit score?
Yeah.
Good question. Some people will draw your credit report, and it will trigger an inquiry. So it kind of balances itself out. But that's a good comment.
I have a question. What if they automatically give you an increase in your credit? How does that affect you?
Well, that's the same thing as if they offer you, say you're pre-approved. Like we've all seen the pre-approved mail for certain amounts. That's a different kind of inquiry. We differentiate it by calling it hard versus soft inquiries. A soft inquiry is like, these creditors can, the bureaus sell your information all the time. The creditors can buy your information based on your current FICO scores and where you live, and then they will send out all these emails saying that, or all this direct mail saying that you're pre-approved for a certain amount. But it doesn't take away from your score at all, because you're not the one who initiated it and applied for credit.
But I want to go back to his question, I didn't quite catch it. So
Sorry.
if I ask to raise my limit, that creates a ding on my credit history?
Yes, but we will talk about inquiries soon. Okay, it won't take away from your score, but there's certain restrictions. Okay. So 30% is amounts owed, your utilization ratio. 15% in the green is length of credit history. So it's the average length of all the accounts and the age of the oldest and newest account that are the biggest factors. So this is why if you have a card laying around that you haven't used in years, but you opened it up, once you turned 18, you want to keep that open, because that long credit history is helping this number right here. So even though that's a big misconception I hear all the time, don't close your accounts, because what you're really doing is eliminating that credit history. And you are also going to raise your utilization ratio because you're losing all that extra credit. 10% is new credit. Lenders get really nervous if they see that you've opened other types of accounts. One of the worst things we hate to see as mortgage lenders is somebody who just got a car loan or applied for a new credit card just before applying for a mortgage, because how recent that is going to definitely take away from your score. So you want to kind of be on good behavior before you apply for that really important loan. How many inquiries have been made? So we differentiated between hard and soft. Now, as far as inquiries go, whenever your credit is pulled by a third-party lender or a third-party creditor, it will look back, the algorithm looks back the last 30 days. And if you have the same type of inquiry pulled during that 30 days, it all counts as one. Okay, and that one doesn't even affect your score for the last 30 days. Beyond that 30 days, they will look an additional 45 days. And in that 45 days, if you have all the same types of inquiries, whether it's mortgage or auto or a credit card, that will all count as one also. And that one will affect your credit score, but it's only one. So they do that because they allow consumers to rate shop, basically. Shop for the best mortgage, shop for the best auto loan. So the recurring theme here is, of course, recency. How recent has a late occurred? How recent have you been going around opening up new credit? That all increases your risk assessment. Okay. The last 10% is types of credit used. I kind of alluded to this a little bit. There are 3 different types. One is you can apply for a mortgage. The second one is installment, car loans or school loans. And the third one is revolving, so any kind of credit card, gas loans, department store loans, department store cards are in that category. And what that means is if you have inquiries, multiple inquiries in the mortgage category, it all counts as one under that certain 30-day time frame. Same thing with installment. That does not apply for revolving. Okay? So if you apply for multiple credit cards over a 30-day period, it will trigger an inquiry for each one, unfortunately. Okay. It's just by nature, because a lot of those debts are unsecured. You don't have a car, you don't have a house to guarantee repayment. It increases your risk as a borrower.
Richard, would you have like some advice to like how many credit cards an average person really should have?
Yes, we'll get there. The answer is about 4 to 12, but we'll get there. So, any questions on this pie chart? Okay. What is not in your credit report? I'll go through this really quickly. Age, race, ethnicity, your job, your salary, whether you beat your spouse or not. That is no longer in your credit report. Terms of any loans.
What if she beats me?
I said spouse. So. Consumer-initiated inquiries. Anytime you draw your own credit report, it does not count as an inquiry. So you can go to annual credit report. You can get your free report every year. You can pay for it at Credit Karma. That's up to you, but you can do it an unlimited number of times. Participation in credit counseling, child family support, any information not proven to be predictive of future credit performance. Okay. Yes?
I thought I had heard the things like paying your electricity bill. If you're late on your electricity bill, it doesn't go against your credit report. Is that true?
I've never seen
PG&E, your utilities.
No, not until they send it to collection. So you can have, we've seen all sorts of utilities unpaid from a collection company. So they will either, if they don't negotiate with you and they send it to a collection company, your score will decrease significantly. So I've seen it a lot of times where, even if it's a mistake and it's like a $24 balance with your Verizon bill that you refuse to back down from, and they send it to collections and your credit's ruined. So in those cases, you really kind of have to balance your ego with with what's going to happen with your credit score, especially if you apply for a home loan. The key credit themes I kind of wanted you guys to take away are recency, frequency and severity. Those are the things that the algorithm really looks at, how frequent your derogatories are, how severe and how recent they are. Yeah?
For collection, when they send to collection, how long does that take? Because you said for bankruptcies, like 7+ years.
How long will it stay?
Yeah.
If you have an outstanding balance, it's not going to go away.
No, but if you get it resolved.
If you get it resolved, it will stay on it for 7 years as well. It's not going to leave your credit report. It will still be there. But as soon as you pay it off, you will see a jump in your score. And then gradually, as time passes, your score will also improve. But it's going to be there. It's going to be listed on your report for at least 7 years. For 7 years. And those are some things that lenders will sometimes ask you to explain, especially if it was recent. But beyond that, it shouldn't affect your score if it's been at least 12 months. For foreclosures and short sales, the seasoning needs to be a little bit longer, 2 to 4 years. But if it's a collection for like a utility bill, it shouldn't be that long. So key tips to remember. Now keep balances less than 30%. We went over that with the utilization ratio. At the same time, I was saying, like, if you have that credit card laying around that you haven't used in a long time, it would even help you if you used it. So if you have the cards, it's important to keep it under 30%. But at the same time, if you want to really improve your score, you need to use them. You can't just have them laying around. Even if it's just one $10 charge every month, you need to demonstrate your ability to repay. And that's what will really raise your score. If you keep it at 0, it's not going to take away from your score. But to really build that first number, which is the 35% payment history, it's important to use them. And ideally, you want to have between 4 and 12 trade lines. So that can be credit cards, that can be auto school loans, or it can be mortgages. If you have 4, that's what lenders typically look for, a minimum of 4 trade lines for 12 to 24 months.
Trade lines, you mean different cards? I don't know
Different,
what you mean by trade lines.
different credit accounts, whether they're credit cards,
Okay.
auto school, or mortgage. And can you ever have too much? Probably. You probably, I don't see any reason why you should have more than 10 or 12. Yeah.
Would that keeping a above 0 balance for the credit cards that are sitting around, would that make a difference if your credit score is already at a certain level, or is it just to raise your credit score?
It would be to maintain and to raise your credit score.
Oh, to maintain as well?
Yeah, I think so. I mean, I don't think you could get there without using credit. So
Well, if you've already gotten there, then...
Yeah, if you've already gotten there, if you've already gotten there and you just want to keep life simple and keep it to one credit card,
Yeah.
I think you'll be fine. Again, it's not, I don't know the whole algorithm.
Sure.
Very few people do. I think if I knew it, I'd be killed, but but we can only assume from what we've seen through hundreds and hundreds of reports that that would be the case. Do not close accounts because you want that payment history. Make the right type of inquiries, and what that means is be careful when you give your Social Security card away. When a third party draws it, that's when hard inquiries are made. So if somebody has to have your credit report, draw it yourself first and try to see if that works. And then the last thing is be mindful of timing. Of course, again, you don't want to apply for credit right before applying for really important credit.
I have a question. Being in insurance, sometimes with some states, they run the credit score for rating purposes. And a lot of times we see people get dinged on their credit because of too many recent inquiries. Now, is that always, I'm not sure I understand that. Is that usually the individual that's making those inquiries, or is it other credit agencies that are making the inquiry on you, or a combination of both?
So there's the difference between hard and soft inquiries. The hard inquiries that will take away from your score are only done from creditors who are offering credit, who you're borrowing money from. If it's for employment, or if it's for insurance, or if it's for your landlord, they can all draw your credit as well, but they're soft inquiries. They don't take away from your score at all, but they will appear as an inquiry on your report. So it will be listed there as along with a date, but it won't take away from your score.
So if you're inquiring and checking your FICO score, you're looking for it to go up, you're doing things for it to go up, and you're checking it all the time, that's not going to be detrimental to you, right?
No. You can do it an unlimited number of times, and again, that score may not be the same score as the one that you really need to depend on. But it will give you a general idea, yeah.
Okay.
But I've heard that cell phones are considered revolving credit, therefore you do get a hard inquiry ding when you request a cell phone.
Really?
Yeah. And I've seen it show up on my credit report.
It will definitely show up in your credit report.
Yeah.
But whether it takes away from your score is another matter.
Yeah, would be nice to know.
Which cell phone company?
I don't have that one
Oh.
anymore, but it was AT&T back in the day.
Oh, really?
I don't have that
No, I've
anymore.
definitely seen AT&T on the report, but it's not an inquiry at all if it's.
Because they still brought it up to me, it was years ago.
Uh-huh. I mean, it shows up in your report, that's for sure,
Mhm.
but I doubt that it takes away from your score,
Okay.
unless you miss their payment and they send it to collection.
No, for like if you're applying for a phone.
No, no,
Okay.
it does not. Okay. This is a copy of an actual, the credit report from Experian. I'm sure a lot of you people have seen this before. So starting from scratch, if you don't have any credit, or if you have kids that are, who just turned 18, how do they establish credit? You can open accounts with a cosigner, a trusted cosigner. Again, be careful who you give your Social Security card away from, because if you are a cosigner, then if any payments are missed by anybody, it goes on both your scores. It goes on both your reports. A great way is to be added as an authorized user to an existing account, which is different from being a cosigner, because being a cosigner, both of you are jointly and severally liable. An authorized user means the authorized user is not jointly and severally liable. So you have to be really sure, if you're adding somebody on, that they understand what's at stake here. But that's an excellent way for the authorized user to raise their score, because they get the entire payment history as soon as they're added on of the original user. Okay, so it's great for parents who want to build their kids' credit.
So we can add one of our kids as an authorized user,
Yes,
and maybe never even give them a card to use. They're building credit based on our credit.
that's true.
Yeah,
Their
they're
score
not
will be
really-
raised immediately.
Don't let them know.
But then
Yeah, no.
you will help them build their score
Yeah.
even more.
Okay.
And then the last thing is non-traditional trade lines. This is more for, there are non-traditional lenders that will look at other forms of credit history, such as utility bills, phones, gas bills, in order to establish that credit. But it in no way, shape, or form does this ever factor into an actual credit score. Okay, so you messed up already. What's the damage? Jeez. I know it's kind of blurry, but the same action over here, like if you maxed out your card over here, 9 out of 10, if you had a 30-day late, a debt settlement, foreclosure, bankruptcy, the same action will be different for a consumer with a 680 versus somebody with a 780.
And so just to clarify, the highest possible score is,
It's
800.
850. 850 for the 3 bureaus.
and is it possible to have a score that's too high?
No. Just anything over for lending, mortgage lending purposes, anything over 740 is basically the same. The pricing and the terms offered are going to be the same. So if anywhere from 740 to 850 is just bragging rights. Okay.
I got it.
So you can see, if you max out your card, it's 25 to 45 on a 780 score, 10 to 30 on a 680 score. And the difference is because your first blemish on quote-unquote perfect credit is going to take away from you more than somebody who already has a questionable history, or even an average history, or even above average history. Disputing errors. Traditionally, we've all been taught to write letters, make phone calls, but you'd be really wasting your time. Nowadays, with the internet, it's a lot easier and more effective to go to 3 sources. You can go to myfico.com. They have 3 bureaus listed here and how to dispute with them. That is the most effective way. You can also go to the federal government webpage, the Federal Reserve, right here. I can send these out later too. And then you can go to the Consumer Finance Protection Bureau, the CFPB, which is now funded as much as the IRS. They're the ones going out and suing all the major banks and going after the credit bureaus to make sure that everything is fair for the consumer. Has anybody been on the CFPB website? Go there. A lot of great information for consumers. That's what this organization was created for. And this is the page where you can submit a complaint to the CFPB about credit bureaus. And when you call them, somebody always answers. That's how well funded they are.
Wow.
Yeah, it's a government agency and somebody always answers. Okay. Score enhancing tools. So this isn't going to provide you a lot of information, but just to let you know, lenders are usually equipped with these tools if you wanted to increase your score in the short term. So if you have a mistake, or if you wanted to pay down one of your credit cards to lower your utilization ratio, just to get your score up 3, 4, 5 points, that can usually be done in the short term. But generally, think of your FICO score as the same thing as losing weight. It takes time. There's no quick fix. You have to do it over time, unfortunately. And that's all I have. Do you guys have questions? Yes.
I have a question. It was a few screens back.
Sure.
When you were saying what would be bad for your credit score, and one thing it listed was debt settlement. Does that mean, like when you consolidate, maybe some credit card debt, or?
Oh, the one from FICO.com?
Yeah, what does that mean, debt settlement?
Debt settlement is, I think, so there's 2 types of debt settlement. One is a charge-off. So when a company, when you're late and you're beyond 90 days late, they will consider it a charge-off, which means they're basically writing off the debt, and it's going to have a bigger negative effect on your score than a 30, 60, or 90-day late. What's worse is if they send it off to a third party, and that's called a collection.
Oh,
So,
okay.
companies that are in the business of getting your debt back from somebody else.
Thank you.
That's a good question about the debt consolidation. A lot of people might do that, do a refinance or consolidate their debt or something like that. Is that detrimental because you're taking away a lot of that?
No, I don't think debt settlement means consolidation. Consolidation definitely will improve your score if
Okay.
you improve your terms, particularly with refinancing. So the utilization ratio here is only for revolving accounts.
Oh, okay.
Okay, so if you consolidate, if you're lucky enough to have 3 or 4 homes and you consolidate the mortgages, that's a good thing, especially if your overall payment decreases.
But if you did, I guess I was thinking like if you did a refi on your home and then you got cash to pay off all your credit cards that you had, that's not really gonna be
No, that's a good thing.
negative at all.
No, not
That'd
at
be-
all. You're
Right,
lowering
because
your
it'll bring
utilization
those,
ratio.
but you don't wanna close those cards out, I guess is what,
Exactly.
just leave them open.
Great.
and-
What if you did it through a home equity loan?
That's the
like
same
to
thing as
pay
a
off?
mortgage.
Okay,
Yeah.
so it's,
It operates the same way as a revolving account, because you can draw the credit back and get money back after paying it down. Very similar to a credit card, but it is classified as a mortgage type of account.
I have a question. What if, say like you have an international, property and you're doing a loan on that, does that
Uh-huh.
affect your credit here?
No, it's because it all depends on the creditor. Like if it's an international property with a United States company that reports, then it will. The score is only calculated based on data that they receive and then public information. So they only take what's the data that they receive. Yeah.
I have a question. So one of the things, I think what you said, debt settlement. So like if you were ever sent to collections and you resolve the issue, but I've heard that if you pay, how sometimes they give you a deal where you pay within 30 days, they'll give you an opportunity to pay. They'll cut it off to like half of the price of the balance. I've heard that it's not good to do that it affects your credit. Do you know anything about that?
I actually do. Confession. I've been through it myself. Many, many years ago, but I've been through it myself. Credit counseling will take away from your score. Just like you it's almost like you're applying for new credits. You don't see it very often, but the point is that you want to build your score over time. If you are in credit counseling, chances are your score is already low to begin with. And so it's the initial hit that you take really doesn't make an impact on what, you know, your lifestyle or what you're trying to do. But the whole point in that counseling is to raise your score over time. And you will do that faster, usually because they will renegotiate some of your credit balances, right?
So I guess the answer is, if you can make some settlement to pay, say you don't have the whole amount to pay, but you can pay half, and you're able to negotiate that to pay, to be able to say that this is done, you know, this balance has been, or this account has been closed.
Right.
Rather than leaving it unpaid or not paying anything towards it?
Yes, that's the worst thing.
Okay.
That's the worst thing. So you'll take that initial hit, but you're going to build your score back a lot faster.
Okay.
But unpaid taxes, IRS.
Federal tax liens, any kind of lien is really, really bad. That's one of the worst things that we can see on a credit report. So, yeah, tax liens, anything, unpaid taxes, unpaid school loans, you can't remove in any kind of bankruptcy even. So those will always stay on your credit report. That should be the first thing you pay off.
Does it ever get there though? Because tax, IRS, I mean, if you're, I guess if you're not employed, then they'll put it on your credit.
Yes,
But if you're
because it's all
employed,
public information.
Yeah, they're coming at your paycheck, I would think.
Oh, I don't know if they can garnish wages.
Oh, they garnish.
I think
Oh.
they do.
Yeah.
They can,
Yeah.
They can do anything.
They can do anything. Yeah.
they can garnish, yeah.
A few announcements. I have feedback forms right there. If you guys wouldn't mind filling those out real quick, I would really appreciate it. Ray Don can pass them out. And I have other goodies on the table, so you guys can pick some up. Any other questions if you want to come up to me?
Tool, by the way.
Oh, the Yelp reviews, yes.
So I looked through here and I didn't count how many Yelp reviews we got here, but there must be at least 30. The word "great" shows up in every single review of your services.
It was great.
So, any more questions? I think it was a great session. I wish I heard some of this stuff when I was in my 20s.
Yeah.
I made that mistake, I made that mistake, I didn't know about this, so really very well done. Guys, I want to also point out that, you know, Richard is a trusted advisor to me and MacCorkle Insurance to all of us. You know, if any of you run into clients who need some advice, clearly this is a man who knows what he's talking about. You know, wholeheartedly send him over to Richard. Right? As always, we're always looking for feedback for the next topic. So if there's a topic you guys would like to hear, whether it's financial or more health related, whatever it is, let us know through the suggestion box. You can talk to Nicole, you can talk to me. Let us know what you guys want to hear about next time.
First time homebuyer program?
First time, well, if there's enough people, let us know. We'll do it. All right, thank you much, everybody.
Thank you, everybody.